Good day, grade 10 accounting learners. Welcome to Chavalala Accounting Tutoring. On today's video, we are going to do accounting equation. Accounting equation, you must make sure that you understand accounting equation if you are doing accounting, because there is no way that you can pass accounting very well without understanding the foundation of accounting equation. Accounting equation, if you can check on accounting, it applies almost everywhere in accounting. So you must make sure that you understand accounting equation after this video. Without waste of time, let's go to question number 2.1. Indicate the effect of the given transactions on the accounting equation. We have it's A is equals to E plus L, meaning A stands for asset, E for equity, L for liability. Show an increase with a positive and a decrease with a negative, meaning you have to, if it's an increase under asset, you have to indicate with the positive sign. Then if it's a decrease, you have to indicate with a negative sign. Then here we have an example, but let's go straight to our transaction. 2.1.1 issued an EFT to Telkom to pay the telephone account for 210. Then here we have, okay, usually on accounting equation we have two accounts. We have to find two accounts. I'm not saying that sometimes you won't find more than 4 accounts, but I'm saying that usually you'll find 2 accounts. So here we have bank and usually it affects 2 accounts, but I'm not saying that it affects only 2 accounts, but I'm trying to say most of the time. So you must make sure that you find 2 accounts. So this transaction is going to affect asset and equity. Our bank is going to decrease by 210. You have to remember these are our bank falls under asset, and bank decreases on the debit side and it increases on the debit side. But for now it doesn't matter. You just have to know here. You just have to write minus 210, which is for bank, and also this side we are also going to say minus 210 because it decreases our equity. Then we are done with the first one. We go to the second one. The owner increased this capital contribution for 150 to 175,000. Also this one it's going to affect 2 accounts, which is asset and equity. But what we're gonna do firstly, we have to calculate that increases. As you can see, the capital contribution increased from 150 to 175. So to get the increase, you're going to say 175,000 minus 150,000, which gonna give us it's 25,000. It's 25,000. So since the owner increased the capital by 25,000, so this transaction is going to affect asset and equity. Our asset, which is bank, it's going to increase by 25,000. Then also our capital that falls under equity, it's going to increase by 25,000 plus 25,000. Then we are done with number 2. We go to number 3. PTK voucher issued for stationery both for 300. Then this one is going to affect our asset and and equity. So since here we bought stationery, meaning that money is from our bank. So our bank here, which is under asset, is going to decrease by 300. Also our equity is going to decrease by 300. Then the first one, both trading stock on credit from SASA suppliers for 6,500 less 325 trade discount. So what we are going to do here, okay, before I do the calculations, this one is going to affect asset and liability account. Why asset and liability account? Since we bought stock on credit, whenever we bought trading stock, it falls under asset. So our trading stock is going to increase. Then we come to liability. Since we are buying on credit, we are not buying on cash, meaning our liability also going to increase. Then firstly, let's get the let's minus that discount. 6,500 minus 325 which is going to give us 6,175. So as I said here, it's going to affect our asset, which is trading stock. Here our trading stock is increasing because we are buying. So we're gonna say plus, okay, this one 6,500 minus 325 is going to give us 6,175. Then you're going to say plus 6,175. Then also under liability, you're going to say plus 6,175. Then we go to number 5. Then, okay, sorry for this. I was not numbering here. This is 2.1.1. This is 2.1.2. Then 2.1.3. Then 2.1.4. Then we go to 2.1.5. Then let's read the transaction. Sold goods on credit to Eskolisi for 4,800. Then cost price of that good was 2,800. Then from this one, you need to be careful. This one is going to affect, it's going to affect 4 account. How? 4 account, how? Okay. Firstly, our Eskolisi, it's our debtor, since he or she bought good with credit. So here, firstly, we are going to have debtors control and sales. And remember, debtors control is an asset. So what we are going to do, we are going to say plus 4,800, which is for debtors control, 4,800. Then it's also going to affect our equity. As you know, sales falls under equity. So also our sales are increasing by 4,800. Then we go to the one for cost price. Here we have trading stock and cost of sales. And then since we sold that good, meaning we are no longer owning that good in our business, so our trading stock is going to decrease by 2,800 minus 2,800. Also our cost sales, they are going to decrease by 2,800. 800. I hope I'm clear with this one. Do not confuse yourself here. For account, we have sales. I mean, we have debtors control. Debtors control will increase by 4,800. Then under equity, we have sales. Our sales will increase by 4,800. Then here we have trading stock. Our trading stock will decrease by 2,800 since we are no longer owning that good in our business. We sold that good. Then also our cost price will decrease. Then we go to number 6, which is 2.1, 2.1.6. Return damaged good to SASSA suppliers for 1,300. Okay, we return good to SASSA supplier here. And obvious, guys, okay, this one is going to affect two accounts, which is asset and liabilities. Why asset and liabilities? Since we were returning good can be trading stock, which falls under asset. So meaning our asset, they are going to decrease by 1.3. Then we also have liability. Since we bought that good at SASSA, meaning we bought with credit. So now also our liabilities, they are going to decrease because we return that asset back, I mean that good back to our SASSA supplier. So what we are going to do, we are going to say minus 1,300. This 1,300 is for that good, which is our trading stock. So it decreases our asset. Then also our liabilities, they are going to decrease since we return that good back 1,300. And then we are done with this one. So if you find this video very helpful, make sure that you like, comment, and subscribe. We go to 2.1.7. 2.1.7. Okay, as policy, a debtor returned sum of goods he bought. Okay, as policy, he or she was our debtor, but now Escolis is returning goods back into our business. So also here, okay, let me read the full statement. 500, okay, Escolis, a debtor, return some of the good he bought for 500. Then cost price of that good, it was 300. So also here we have 4 accounts, which is what? Which is debtors control, sales, trading stock, and cost of sale. Then our debtors control, as you know, debtors control, it falls under asset. Our debtors control now, they are going to decrease. They are not increasing since as police return goes back into our business. So here we are going to say minus 500. Remember, we sold that good with, remember Escolis bought that good with 500 in our business. So now Escolis has decided to return that good back into the business. So we are going to say minus 500. We are saying minus 500 because it's no longer our debt. So obviously our debtors control has to decrease. Then also our sales, they are going to decrease since Escolis return good into our business. Our sales are decreasing. Then here we have trading stock and cost of sale. So since Escolis returned the good into our business, meaning the trading stock is going to increase in our business. Whenever trading stock increases, also the cost of sale, they are going to increase. So here we are going to say plus 300 + plus 300, then also the other one plus 300 for cost price. As we are done with 2.1.7, now we are going to the last one, which is 2.1.8. 2.1.8. Let's read the transaction. He received a payment of 1,100 from A Parker as part settlement of his account after a 5% discount was allowed. A Parker, he was our debtor. So he was our debtor. So now he decided to pay back that amount, and then he received 5% discount. So here we are going to say plus 1,100 on the asset. This is for banks, this the money is coming into our business. And then we're also going to have debtors control, which is going to decrease since Parker is paying back that money. So what we are going to do, since as you can see, this 1,100 is after discount. Now we need to get that full amount before discount. What we are going to do, we are going to say, to get that full amount, you're going to say 1,900 multiplied by, then here you have to use this method. What you want divide by what you have. We are looking for 100% and we have 95. Why are we saying that 95? Why are we saying 95? 100 minus 5% is going to give you 95. So it's 95 just because we subtracted that discount here. So now we want to get that full amount. So we are going to get 2,000. 2,000. So we are going to say minus 2,000 again under asset. Why are we minusing 2,000 here? Our debtors control falls under asset. So meaning it will decreases our asset since A Parker is paying that money into our business. So here we are also going to have that we also have to record that discount. So firstly, we have to calculate our discount. How do we calculate our discount? Since now we have the full amount of 2,000, to get the discount, we are going to say 2,000 multiplied by 5 over 100, which is going to give us 100 rand. So we are going, this 100 rand of discount is going to affect our equity. So yeah, it's going to affect our equity. So we are also going to say minus 100 here. I hope you are done with today's video. So yeah, make sure that you check also the previous question papers, so that you can make sure that you really understand accounting equation. Make sure that you master accounting equation before grade 11, before grade 12, because if ever you don't manage to understand accounting equation at grade 10, I'm telling you, it's going to be hard. It's going to be hard because accounting equation applies everywhere. Otherwise, thank you for watching.